We continue to follow breaking news. The Bank of Canada has announced a major hike to its key interest rate. For the latest, let's bring in CP24's Lindsay Biscaya. Lindsay.
Yeah, that's right, Jamie. So the Bank of Canada has raised its interest hike a full percentage point, which is actually more than what we were expecting today, which brings the key interest rate to 2.5%. That's up by 100 basis points. So it is interesting to kind of dive into this further. And to do that, we are joined with BNN's Bloomberg reporter, David George Kosh. Thanks for joining me.
Hi, Lindsay.
So let's break this down for people who might not understand exactly what this means. This is the third interest rate hike in this year, really.
Yeah, that's right. It's also the largest single rate hike since 1998, 24 years. A bit of a historic day here in Canada, pushing the policy rate to 2.5%. Now, what this is going to do is obviously have an impact on people that have any sort of debt. As banks, commercial banks will likely be increasing their prime rate, which will raise financing for things like debt, but also raise mortgage rates as well. If you have a variable rate mortgage, or you're looking to essentially lock into a fixed rate mortgage and buy a house, then your payments are poised to become much higher on a monthly basis. And this is essentially all done to quell the super high inflation that Canada is currently in. It's very persistent. The Bank of Canada actually acknowledging that it got its inflation projections wrong. And to do that, to help make sure that inflation doesn't continue to spiral out of control and remain persistently high, especially to make sure that Canadians don't further expect that inflation will remain at these high levels, then that's why the Bank of Canada will need to raise its interest rate to essentially ensure that demand from Canadian households, as well as company investment, will start to tamp down a bit. So prices will essentially move in lockstep as well. So overall, the Bank of Canada does now expect to see inflation's currently around 8% right now. They do think that by 2024, it'll get down to about 2%. That's still going to have an impact on Canadian economic growth. They do now see lower expectations for Canadian GDP. That should come down to as low as 1 3/4 by next year. Still, the Bank of Canada doesn't necessarily see Canada entering a recession, so that's a bit of a silver lining in this case. But at the end of the day, the Bank of Canada thinks it needs to do this historic rate hike move in order to make sure that inflation doesn't remain stronger for much longer.
Okay, you kind of touched on this, though. You said 2024. So for people who are thinking maybe we might see an instant change when it comes to inflation and the cost, the rising cost of prices, that's not the case, right? Like, it will take some time before we start to see the effects of this hike.
Yeah, that's right. I mean, you have to kind of like picture this, the Canadian economy as a very large cruise liner, a very large ship, and you can't necessarily turn it on a dime. And what the Bank of Canada is doing is they're essentially the captain at the wheel. They're looking to essentially move the ship slowly off course rather than essentially shift it very suddenly and very harshly. Doing that would create a significant shock to Canada's economy and likely plunge the economy into recession. To avoid that, things need to be a little slower than projected. Now, as I said earlier, because the Bank of Canada did get their inflation projections wrong, that's why they feel the need to move by this 100 basis point rate hike, which is, again, a little higher than what economists were predicting. Economists were predicting a 3/4 point hike. Some were predicting a 1/2 point hike. With the Federal Reserve in the U.S. moving by about 75 basis points, that 3/4 hike, that's what people here in Canada economists in Canada were expecting as well. Typically, Canada moves in lockstep with what the Fed does. So ultimately, moving too sharply would cause the economy to go off course. That's why the Bank of Canada is essentially doing this move today and hoping that its gradual moves, potentially even higher over the course of this year, will be enough to stave off that recession.
Okay, David, thanks so much for your time. I appreciate it. So, Jamie, there you have it. It's a good news, bad news kind of day when it comes to those rate hikes, especially for homeowners. But as David said, a historic day, that's for sure.
Thanks for that report, Lindsay.